Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be answering the question on whether or not you should annuitize now or wait. Usually it's better to wait, but everyone's circumstances are different, and I'm going to show you a SPIA, DIA, as well as an income rider. Okay, so again, if you're looking for the best annuity, okay, and I say this in all my videos, I always tell people if you're looking for annuities and you're not sure what the payouts are, go to my website, check out the annuity calculators there, and you will be able to see for yourself what the payouts are. And then at that point, if you want to reach out to me, if you're looking to purchase an annuity and you want me to help you with that, I'd love to do that. So otherwise, you can go to a link below this video and it goes directly to my calendar as well. So, all right, let's dive in. I'm going to show you exactly how this pans out, and then you can kind of decide what's best for you. Okay, so looking at my screen, I am just throwing in someone who is 62. It's a single payout. If it's a joint payout, it'll be a little bit less. But right now, just to illustrate the difference between taking an immediate annuitization and a deferred, I want to focus on this, the SPIA and the DIA, and then we'll move on. All right, so $500,000, I'm going to click cash refund because if something happens to this person, if something happens to you while taking income, you want to be able to at least get a refund of what you have not used. You can do a no refund option, but the income is not a lot more. So it's usually not worth it when people see it. They're like, I don't want the insurance company to take it. So, but it's totally different. Everyone's different. Okay, so based off of that, we'll put $500,000 in, and we want to take immediate income, okay, next month. So we're looking at $29.35 per month guaranteed from Athene, and then New York Life is right below them. Okay, and you can see all the other options, Mass Mutual's there as well. But yeah, if you're looking for highest income, Athene is it, and they're great. If you want a little bit higher of a rating, then New York Life, and they're great as well. I work with all these companies. Okay, now what if you want to defer it? Okay, same $500,000. Now you want to defer it. Okay, let's just say defer 5 years. Okay. So 5 years from now, the same $500,000 is going to give you $41.67 per month. Wow. That's a big difference, right? So you just jumped like $1,100 per month. Okay. That's a big difference. So it might make sense to defer it, not annuitize now and take it later. So it just depends on you and what you're looking for. Now, I don't know what your circumstances are. You might already have an annuity and you're just trying to decide if you want to annuitize it, or maybe it's a MYGA, a multi-year guaranteed annuity. Maybe it's a fixed index annuity and you have the option to annuitize those because they all give you those options. Or maybe you have a pension and you want to annuitize it. Okay. It's always going to give you a certain amount if you do an immediate payout versus a higher amount later on. So it just depends on what you're looking for. But if you have a pension that does not increase later, then you might want to look elsewhere. And typically when people are trying to decide whether or not to annuitize their pensions, they reach out to me because they realize there's a lot better options out there, especially if you take a lump sum and you decide to annuitize it somewhere else. So, or defer it out longer. So anyways, I just showed you the SPIA, which is a single premium immediate annuity, and then a DIA, which is the same contract, it's just deferred. That's why it's called a deferred income annuity. Now I'm going to go into the income rider, which typically beats both of these options. Not always, but typically it does, and it's usually a little bit more flexible. Okay, so let's take a look. I'm going to go over to the income rider calculator, and we're going to say, let's just say for immediate, same numbers, same $500,000. What does this look like? All right, so $28.19. So it's not as high. It's like $100 less. So Prudential is a good company for that, and the income is guaranteed just like the SPIA is. So the reason why this is often more popular, even if the income is slightly less, is the fact that if you want to cancel it, you can. You can see the cash value right here. It goes down over time as you take that money. So you can activate your lifetime income, have that forever. You can see that just goes, and then they show you, here's what it looks like if the account balance has some growth. The account balance will last, probably till you're 77, 78. But again, if you're looking for income, it doesn't matter. The account balance does not matter. But the death benefit is there just in case. So, but now let's say, all right, well, what if I want to wait the same 5 years? Okay. What does that look like? So it's definitely better. So New York Life was paying like what, $4,100 and some change. So this one is $200 more per month. Okay, $2,400 more per year. Nationwide's a great company. They got some of the best customer service in the industry, and they're A+. So you can't beat that. And the nice thing about this is it's very flexible, meaning if you want to change your mind, take income earlier or later, you can. And they show you, here's what it looks like if you take income at 5 years, it's $52,000 a year. Okay. If you wait 3 years, it's $46,000. So it's very, very flexible. You might decide your plan is to take income in 5 years, but you might change your mind and take it earlier or later. And when you set up these contracts, you're not actually choosing a date like you would a SPIA or a DIA. You're just setting yourself up for guaranteed contractual income based off of guaranteed contractual growth rate. And so there will be no surprise. You know exactly what your income will be if you wait 3 years or 4 years or 5 years or 3.5 years. Okay. If you look at 3.5 years, it'll be somewhere between the $46,000 and the $49,000 a year. So it's that simple to figure out. So, and it's very flexible. You might decide, well, I just want my money out. You can take your money out too. You can see your cash surrender value right here. It's a little bit less than your account value over here because they've got surrender charges. So, but at least you can access the money if you want to cancel it, because I've had people reach out to me that bought a SPIA somewhere else and they're like, man, rates are so good right now. Can I replace the SPIA with something else? And I'm like, no, you can't. It's, once you annuitize it, it is done. You cannot get that money back. So with an income rider, you can still set yourself up for high guaranteed contractual income. And you can see it beats the DIA. And at the same time, if you want the flexibility to cancel and take your money out, you can do that too. So it's really the best of both worlds, in my opinion. So I guess when you look at these, in hindsight, it's always better to defer if you're able. But some of us aren't in that position, and we have the money when we get it, and we want to annuitize right then. But if you are in a position to sit there and let it grow and wait, yeah, proper planning in the beginning definitely gives you more income later. When you can see 8 years, the same $500,000 gives you $5,700, and you can see Nationwide, they're at $5,600. So again, you can do ClearSpring. They're good. They were Guggenheim before, and they're a great company. But if you want something with a little bit higher rating, then Nationwide is pretty close as far as the income. And they're both good options. I work with both companies. But if you look at the income there, it's $67,000 a year. Pretty good. But you have to wait 8 years to do it. So in hindsight, it's always good to let it grow. Again, if you look over here, you can see here's the original plan. The original plan is to take it in 5 years, right? Take $52,000 out a year. But you know exactly what it's going to be. If you wait, it's going to be these higher amounts. That's contractual. Okay. So that's what's so nice about the income rider is you can buy it, you can set yourself up, and then, you can have your plan, but you can change it anytime you want. And you already know exactly what it's going to be if you take it earlier or later. So I love that about these. Anyways, if you're looking to purchase an annuity, you want some help from someone who's transparent, who's willing to show you everything, regardless of what he's getting paid, then I'd love to help you. There is a link below this video. It goes directly to my calendar. We can get on a Zoom meeting and I'll answer your questions. I won't try to sell you anything, but if you are looking to purchase and you're thinking you'd like my help, I'd love to help you. So otherwise, go to my website, check out the annuity calculators for yourself, and decide what's best for you. And then at that point, if you want to book a call there on my website, you can do that too. So anyways, I don't bite. I like to help and be transparent. And obviously I make my money selling annuities, but I don't like to push products. I hate that. I hate being sold. And so I'm sure you don't like it either. So anyways, hope this helps. Hope this gives you some clarity. And if you've got questions, comment below. If you like the video, subscribe, share, watch my other videos. They'll answer your questions as well. There's a ton of content that I've created over the last several years, and I think you'll enjoy watching those as well. So anyways, thank you so much. I appreciate you, and we'll see you next time.